removed all the unnecessary indicators and kept only EMA 21 plus a powerful RSI method. But the real question is, does it actually work? Let's backtest it. The goal of this strategy is simplicity. We are using EMA 21 as our trend filter and ultimate RSI as our momentum confirmation. EMA 21 helps us understand the short-term market direction. Instead of trying to catch every small movement, we want to trade with the current momentum. The second part of the strategy is the ultimate RSI indicator. This is not the traditional RSI that most traders use. This version uses RMA calculation, and in this setup, I use a length of 21. I also made some personal adjustments to the indicator based on my own trading style to make the signals cleaner for scalping. For this strategy, the chart setup is very simple. First, we add EMA 21 to the chart. Second, we add ultimate RSI with the length set to 21. That's it. No extra moving averages, no unnecessary filters. The idea is to keep the strategy easy to understand and easy to test. Now let's talk about the entry rules. For a long trade, first, the price should be trading above EMA 21. This tells us that buyers have control in the short term. Second, we wait for ultimate RSI to confirm bullish momentum. We don't want to enter just because the price is above the EMA. We need confirmation that momentum is supporting the move. After both conditions are met, we wait for our entry confirmation and take the trade. For a short trade, the rules are the opposite. Price should be below EMA 21, showing short-term weakness. Ultimate RSI should confirm bearish momentum. When both conditions align, we look for the short entry. The main idea is simple. EMA 21 tells us the direction, and RSI tells us whether the momentum supports the move. Now that we understand the rules, let's move to the most important part of this video, the back test. Because a strategy can look perfect on a chart, but only the results can tell us if it has potential. I will test this strategy on the 1-minute time frame and review the trades one by one. Let's see what happens. Trade number 3. Now we have another valid setup. Price moves above EMA 21 and starts holding this level. Ultimate RSI confirms that buyers are gaining control. The entry is taken after confirmation. At first, the trade moves slightly against us, which is normal in scalping. But the setup remains valid because our conditions have not changed. Eventually, price reaches our target. Another successful trade. Trade number 4. Here we have a losing trade. And this is actually a very important example. The setup looks good at first. Price is above EMA 21, and RSI gives a bullish signal. But the market does not continue higher. Price reverses and hits the stop loss. This is why risk management is more important than trying to avoid every losing trade. No strategy wins every single time. The goal is to make sure our winning trades can cover our losing trades. Trade number 5. Now let's look at another example. This is a cleaner setup. The price respects EMA 21 as support. Ultimate RSI shows strong momentum, and the entry happens with better confirmation. This is the type of trade where all conditions are aligned. The trade reaches the target. After going through multiple examples, we can see the main strength of this strategy. It is not trying to predict every market move. Instead, it waits for 2 things. First, EMA 21 gives us the direction. Second, ultimate RSI confirms the momentum. This combination helps remove many low-quality entries that happen when traders use only one indicator. For this backtest, after analyzing number of trades at setups, we had winning trades, and losing trades. The final win rate was percentage% with a risk-reward ratio of RR. Remember, these results are only from this specific test period. Market conditions change, and every trader should test the strategy on their own market and time frame. But the important lesson is that a simple system with clear rules can be more useful than a chart full of indicators. Now let's move to the final thoughts and see who this strategy is suitable for. For every trade, we are looking for the same conditions. Is price respecting EMA 21? Is ultimate RSI confirming momentum? And most importantly, was the entry taken according to the rules or based on emotions? This is the difference between a real strategy and random trading. A good system is not about winning every trade. Losing trades are normal. The goal is to create a process where good setups have a higher probability and bad setups are filtered out. After testing this strategy, we can see that simplicity can sometimes be powerful. EMA 21 gives us the market direction, while Ultimate RSI helps us avoid some weak entries. Of course, no indicator can predict the market with 100% accuracy. Risk management, proper position sizing, and discipline are still the most important parts of trading. If you enjoyed this type of strategy testing, let me know in the comments which indicator combination you want me to test next. And don't forget to subscribe for more scalping strategies and backtest videos. Pro tip section. Before we finish, I want to share one extra tip that can improve the quality of your entries. Even though this strategy only uses EMA 21 and Ultimate RSI, sometimes adding one simple confirmation tool can help you avoid weaker trades. One tool that works well with this setup is Fibonacci retracement. For example, when the market is moving in an uptrend and price pulls back toward EMA 21, you can use Fibonacci levels to check if the pullback is happening around an important retracement area. If price reacts near a key Fibonacci level and Ultimate RSI starts showing momentum again, this can create a stronger confirmation before entering the trade. The same idea works for short setups. Remember, Fibonacci is not a signal by itself. It is only a confirmation tool that helps you understand where a potential reaction zone might be. The goal is not to add more indicators to your chart. The goal is to improve the quality of your decisions. But here's an interesting point. In one market situation, the same strategy that just gave a few good trades can give the wrong signal. At the end of the video, I show exactly when we should not use this system, because this point can prevent many scalpers from losing money. So after testing this EMA 21 and Ultimate RSI strategy, what can we actually learn from the results? The biggest lesson is not about finding a perfect indicator. There is no indicator that can predict every market move. The real advantage comes from having a simple system with clear rules and the discipline to follow them. In this strategy, EMA 21 has one important job, showing us the short-term market direction. Instead of fighting the trend, we wait for the market to show us where the momentum is going. Ultimate RSI has another important role, confirming whether the momentum is strong enough for an entry. When both conditions come together, we have a higher quality setup. But there is one thing every scalper needs to understand. A good strategy is not only about finding good trades. A big part of becoming a better trader is learning which trades to avoid. Sometimes the best decision is not entering a trade. Skipping low-quality setups can save more money than finding one extra winning trade. And remember the important point I mentioned earlier. This strategy works better when the market has clear movement and momentum. During sideways and choppy conditions, even good indicators can create weaker signals. So always pay attention to the market environment before taking any trade. If you want to test this strategy yourself, don't just copy the settings. Spend time watching the charts, backtest different markets, and find the conditions where this system performs the best for your trading style. If you enjoyed this type of strategy testing, leave a comment and tell me what indicator combination you want me to test next. I will continue testing simple but powerful scalping systems and sharing the results. Thanks for watching, and I'll see you in the next video.